That's a very interesting question. If I were to explain IBOR, ABOR to a child, I would probably start with thinking about a business that a child would run, such as a lemonade stand. So from a investment book of record perspective, think about lemonade as the commodity in which you're selling. So you are selling lemonade, you're actually making sales, transactions. The IBOR effectively is going to allow you to track the sales on a day-to-day basis. And then the ABOR will allow you to understand the sales that you've actually done for the day and then report those out to the constituents that would be interested in understanding how your sales have performed, such as your mom or your dad.
Thematically, I think you took some good ideas that I had as well. I had similar thoughts. So I would explain it, to a child as school, or I'd use that analogy like it is school. So every day you're going into school and you are learning and you're progressing. You're taking tests, you're doing homework, and you're evolving as an individual. And you get evaluated on a day-over-day basis, and you're effectively building yourself up on a daily basis. At the end of that period or the end of the term, you ultimately get a report card. And that report card is an assessment over the period of that entirety of the term. And ultimately, that would be your ABOR, and the day-to-day would be your IBOR.
Many insurance companies, their books have actually changed. They're no longer just purely fixed income and bond focused. We're seeing the evolution into things like structured products, private debt, private credit. And so the sophistication and the actual complexity of the insurance book has actually evolved over years for a number of different reasons, really because of the hunt for yield. And so from that perspective, I think the asset management side of, an insurance companies, their needs have evolved just purely based on the fact that their balance sheet has actually changed over time.
There really has been a change in the mindset from insurers, both on the asset management side and certainly the pure play insurers, where it's less of a focus on pure portfolio management in ALM and much more partnership across risk and portfolio management and tech and ops to drive the strategy and the execution of their organizational priorities as they react to the market and as they think about the evolution of their own product lines and the investment processes that they have.
From an asset management perspective, we have roughly about $500 billion of insurance asset management on the system and $6 trillion of insurance assets that are actually processed through Aladdin. So insurers are actually deeply ingrained in the ecosystem that is the Aladdin platform today. And a good portion of the development that actually comes into the Aladdin system is on the back of the feedback that we receive directly from insurers. When you think about the whole portfolio view and being able to have your publics and your private assets live on one platform where you have all of the underlying data, the ability to do fund look through and see the underlying company level information and put that at the same level as you would with any of your other public assets, for instance, is really hard to achieve. And then you layer in something like climate, for instance, for a P&C company and wanting to really understand the impact of things like transition and physical risk and how does catastrophe impact my portfolio. I think these are things that when you bring it all together, and then the idea of even layering in something like credit on top of that as well. Again, we talked a little bit about things like really understanding your default adjusted cash flows, your ALM. When you bring that all together, the power of something like that, I think, is incredible.
It's likely a little bit of both, where there are new entrants in the market, and those new entrants are leveraging the latest and greatest technology. They're managing the assets in a unique way that differentiates themselves from your traditional, P&C or life co or health co or anything along those lines. And so I think there's a natural reaction to retaining market share and continue to innovate and develop new products and bring products to bear in reaction to what's happening to the markets.
At the end of the day, insurance companies are really looking for sophisticated solutions that are going to allow them to manage the book and make decisions that are ultimately going to be accretive to their ROE. Okay.
Was it? I don't know.